Hey everyone, and thanks for jumping back into the Cryptoverse. I wasn't planning on doing a watch party, but it seems like that's what the community is demanding. And had about, I don't know, 20 people ask if I could do one. So here we are. We will see if Bitcoin can make new all-time highs. Note that it already made new all-time highs against some of the currencies. Like if you were to go look at the euro, if you go to like Bitcoin euro valuation, it's already cleared new highs. If you just simply look at like Bitcoin's market cap, in fact, Bitcoin's market cap has already put in new highs. So now it seems like we're just waiting to see if Bitcoin USD can go to a new high. And again, it needs to essentially go to 69K. Okay, or maybe, I mean, it looks like we went to 69K back in November. At least on Coinbase, it looks like here we went to 69K back then. So we would need to clear 69K in order for a new all-time high to occur. So we're going to go through a lot of the different metrics that we've been tracking. I know I do a lot of these like long, hour-long videos where we talk about all sorts of potential outcomes, but in general, if you're new here, which I imagine there are a few new people, my general thought process at this point is, Bitcoin is sucking out liquidity from the altcoin market. Also, it's getting new liquidity, obviously, from the spot ETFs as well. And my guess is that it's going to keep on going until it sufficiently breaks these altcoins down, right? And they're getting pretty close. But we do want to cover some of those things. So I'm going to go through a lot of different metrics. I know there's a lot of comments. Maybe I'll get to some of those later. I don't imagine many of those comments are very nice comments, especially considering my views that altcoins are just bleeding back to Bitcoin. And I know that's not a popular view to have, but it is my view. And so we will just see if the Bitcoin dominance rally can continue. So back at the beginning of 2022, back over here, I put out a video saying alts are too risky and essentially just go Bitcoin heavy. And one of the reasons for that is because, as Bitcoin goes through this motion here, the dominance of Bitcoin should generally trend higher, right? And if we go get the, let me go grab the Bitcoin dominance excluding. So this is Bitcoin dominance. It's an approximation of Bitcoin dominance excluding stablecoins. So if you add that onto the chart and we switch that to a different scale, so we're going to move to a new scale. So you can see now that, again, it's easy to get lost in the day-to-day price action of Bitcoin and Bitcoin dominance, but you can see that as Bitcoin USD came down and all the way back up to nearing new all-time highs, the dominance of Bitcoin has basically just been in a macro uptrend ever since. So again, I know back then saying, altcoins are too risky in, at the beginning of 2022 and just say, go Bitcoin heavy. I traded my ETH for Bitcoin around the merge and also before the merge. Again, I know those are not popular things to do, and especially considering that some altcoins have actually outperformed Bitcoin. But at the end of the day, hopefully this is a useful lesson. I mean, I've learned lessons myself over the last couple of years, but hopefully this is a useful lesson in how once the bear market gets started over here, it's useful to recognize that the dominance is likely going to keep going up until we hit new all-time highs. And that's what happened last cycle. I mean, that's what happened last cycle. And you can see that the dominance rally has been going from, like 39% all the way to up to about 54% today. So we can clearly see that trend has played out. Now the question, of course, is, well, what happens next, right? What's going to happen going into the next few months? How long could we assume that the Bitcoin dominance train will continue? At what point will altcoins start to durably outperform Bitcoin? I will talk about, some of those things in this video. There's a few things I have to mention because there's a lot of different confluence. There's a lot of confluence right now that we've been talking about for basically the last year and a half. And I would be remiss if I didn't at least point it out, right? I would be remiss. That's not to say that Bitcoin can't exceed my expectations. Bitcoin's been exceeding my expectations for a long time now. And that's why after we had this breakout over here, I say, guys, don't stand in the way, right? I mean, there's no sense in trying to stand in the way of this thing. When you get those types of massive breakouts, you might as well respect it. And I've been in the business before of trying to figure out exactly where those highs are going to come, but ultimately, I think the best strategy is just trying to buy at low risk levels and sell at high risk levels and tune everything else out. So the things that I will mention are, there's a lot of things that we've talked about, right? A lot of things, a lot of videos we put out over the last couple of weeks. It seems like we are coming to a crescendo, right? It seems like we're coming to a crescendo. The halving is just over a month away, right? Crescendos can last for a while. I'm not saying that they can't, but there's a lot of things we've looked at, and I want to go over those things. And apologies ahead of time if I missed Bitcoin hitting a new all-time high, but I do want to talk about a lot of different things. I think it's really easy to let our emotions get the best of us right now because of all the incredible price action. And I'll tell you guys, there's a few things I bought in late 2022, right? A few things, not many, but a few. I bought Bitcoin. I bought gold. I bought index funds, and that's about it. Maybe a few individual stocks, not a lot. I was pretty bullish on Meta back then, but again, that's just a single stock. There's not a lot that I bought. And I mean, look, gold is breaking out right now, but at the end of the day, gold is up 30% from when I bought my gold stack. Bitcoin's up 300% from when I bought that stack. So there's no denying that Bitcoin has massively outperformed gold during that time. I think, one of the best regrets to have in crypto is wishing you had bought more, because being on the other side of that, like wishing you hadn't bought as much, is truly an awful feeling, especially in the altcoin market. The nice thing about Bitcoin is that you give it enough time and it tends to just go back to all-time highs, right? What has happened? Bitcoin is basically at new all-time highs. A lot of altcoins are not, right? I mean, they're nowhere close. And that's why remaining Bitcoin heavy. And again, like I think I'm going to change how I do things in future cycles, maybe not talk about Bitcoin dominance as much, but the general idea is that you just stay Bitcoin heavy. And then, sometime after the Bitcoin dominance theoretically tops out, which normally happens after all-time highs are created, you can always buy altcoins with your Bitcoin, right? And again, I know it's not intuitive because you always want to think about like altcoins on their USD pairs. But the reality is a lot of these altcoins just keep bleeding on their Bitcoin pairs, right? So it's a pretty simple strategy, right? Like, it's just, if you're going to buy crypto, Bitcoin, and then you can always use that Bitcoin to buy altcoins later. It's pretty simple, right? And again, this is one of my favorite parts of the cycle because it's such a simple strategy, right? It's just Bitcoin dominance going up. If you want to maximize your risk-adjusted returns or your Sharpe ratio or Sortino ratio, you just stay Bitcoin heavy. And you kind of recognize that some people are going to make more money on altcoins than you are. You can spend a year constructing a portfolio that maximize your risk-adjusted returns, but you have to concede that there's going to be some degen out there that buys a meme coin and they're going to outperform you. That's just the nature of crypto, right? Like, that's just how crypto is. A lot of those people that buy those meme coins that outperform, they end up losing it all in the end. But hey, there's a few that don't. So a lot of things going on right now, right? A lot of things. Oh, it seems like we're moving up to a crescendo. So I want to talk about a lot of the indicators we've been tracking over the last several months, right? Over the last several months. Now, the first thing to remember is that so far, all of these corrections that we've had have been about 20% or so, right? Not too much more than 20%. And over here, just for full disclosure, I feel like I have to communicate what I've done sometimes because I have a bias and that bias will show through. And so if I communicate my bias, then maybe you can disregard some of the things I say because you're like, well, Ben's just saying that because that's what he wants to happen, but maybe that's not what's likely going to happen. So all I've done, right? I bought some Bitcoin over here between 15, 21K, all published on ITC Premium. I did I did take some profits in this range, right? 1/10 of my Bitcoin, 1/10. Now, after doing that, we came back down to 39K, and I said, guys, this might be it, right? This might be the only correction we get, the pre-halving correction. This might be the only pre-halving correction we get before we go another, before we go up again. And I know a lot of people are wanting to see a larger drop than 21%, but that's all we get, right? That's all we got. And as I've said before, by the time we get a larger correction, whenever that time comes, by the time we get a larger correction, it could imply that the trend has then changed, right? That's what happened during the QT bull run in 2019, right? Once we got a larger drop than 20%, it implied that the direction had changed, right? We haven't seen that yet. We haven't had a larger than 20% drop yet. To give you an idea, right? Like what would even a 20% drop be from the all-time high, right? So from the all-time high, 20% drop would be approximately 54, 55K, right? So again, you could theoretically see Bitcoin at 54, 55K and it still not be different than all these prior drawdowns that we've seen so far. But there are some things I want to talk about. One of which is the alt Bitcoin pairs. Okay, so we are currently at 0.43. One of the things I've said many times is risk on until we break altcoins down. It's a pretty simple thing, right? I mean, I don't know how long it's going to take for them to break down. I don't know. Maybe they break down this week. Maybe they break down a month from now. If you look over here at 2018, you'll see that it took 41 weeks for them to break down, and they broke down in 2019. And when they broke down, that marked the local top for Bitcoin in a QT rally. Now here, how long has it been? 37 weeks. So does that mean we have to wait another 4 weeks? I don't know, right? 4 weeks from now, we're knocking on the door of the halving. Could it happen this week? Certainly. Look at the daily time frame. I know they're up today. You know how I know they're up? Because anytime Bitcoin dominance loses a tenth, 10 people tell me. 10 people tell me, how's your Bitcoin dominance theory holding up? So yes, I recognize that over the last couple of hours, some altcoins have pumped. But again, if altcoins are pumping, what does that mean? It just means there's liquidity that's going to flow back to Bitcoin, right? That's the whole idea, right? If ETH Bitcoin is pumping, if alt Bitcoins are pumping, it just means that liquidity is going to make its way back over to Bitcoin, right? Why would it go back to Bitcoin, right? All the degens keep telling me the Bitcoin dominance has topped. So why would it go back over to Bitcoin? We covered it 1,000 times, right? QT, quantitative tightening, high interest rates, where do you go? You go to the safer assets, right? You go to, within every respective asset class, you go to the safest asset. That's why, right? That's why in the stock market, the Magnificent Seven has been holding strong, right? Think about it. NVIDIA, Google, Meta, Amazon, Apple, Tesla. The thing is, right? The thing with the Magnificent Seven is that we've seen some start to fade a little bit. Tesla has faded. Gosh, I'm going to miss the all-time high right now by talking about this. Here it is. You can see 68,491. So Tesla has faded. I think Google has started to fade. Apple, I don't know what Apple's doing, but it's stuck in traffic on struggle street right now. But you still have a few, right? Nvidia is doing okay. Microsoft is still doing okay. There's Meta just broke 500. My guess is that Nvidia could be the last one to finally show weakness. And when that shows weakness, then the stock market gets a larger drop. I've done a little bit of research on past phases where there's been a lot of, concentration in only a few stocks. And that's what normally happens. Like the market kind of keeps on staying risk on until until the last one of that concentration finally throws in the towel. Tesla's already kind of gone by the wayside, at least in the short term. Apple's showing some weakness. I think Google has been showing a little bit of weakness, but you still have Nvidia running strong. You still have Meta running strong. Amazon's doing okay, and so on and so forth. So if you look at alt Bitcoin pairs last week, what happened? They started the week off at 0.45. And then on Monday, they dropped from 0.45 to 0.44. And on Tuesday, they dropped from 0.44 to 0.43. And then on Wednesday, they dropped from 0.43 to 0.4. It's only Monday. We only finished Monday, right? It's Tuesday now, right? It's Tuesday. They're up today. So far, it's 2 hours into the day. Give me a break. They're up today. But what if that liquidity from alts makes its way back over to Bitcoin? Then what? Then you might see these altcoins come back down here to 0.4. Now, the reason why that's important, right? The reason is because if altcoins break support, then they can drop quickly, right? Because every degen in the cryptoverse wants to keep these altcoins elevated against Bitcoin because they don't want to believe that Bitcoin could possibly take back that much market share. So they try and they try to hold it up. They try to keep these altcoins from breaking down, but eventually they break down. I don't know why we should assume this time is different. Hell, even if you think we're down here, even if you think we're already down here, they still broke down on a Bitcoin parabolic rally, right? They still broke down. They turned it around, but they still broke down when Bitcoin made its new highs. So I cannot find a compelling reason to think that altcoins will durably outperform Bitcoin in the collective in the short term. We have the halving coming up. You have all the spot ETF stuff. None of the other stuff has that going on, right? And this is very a narrative. I mean, it's very much narrative-driven market. I'm not saying Bitcoin can't get corrections. It probably will get a large correction at some point. The point is that if and when it does, it likely won't drop as much as altcoins, and the altcoins will just keep losing value to Bitcoin. Again, this Bitcoin dominance view has probably been one of my most contentious views ever. And believe me, there's some good ones to choose from. But a lot of people are not happy with, this whole dominance theory stuff. But I have to say, you really have two sources. I mean, you have three sources of liquidity into Bitcoin, right? You have the spot ETFs, you have altcoins, and you have, the people that just regularly DCA it, right? The problem with altcoins, there's 10,000 of them. There's 20,000 of them, right? I mean, everyone's trying to show their new favorite altcoin. By the way, if it helps anyone, I'm getting about 5 to 10 requests per day to shill an altcoin for money, right? I just ignore them, but some of your favorite influencers are not ignoring them. Okay, so you can go praise them all you want for talking about these altcoins, but a lot of them are getting paid to do it. So just remember that, and they're getting paid to do it in a Bitcoin dominance rally, right? So in a situation where Bitcoin dominance continues going up, it's taking that liquidity from the altcoin market and using that as fuel. Okay, so altcoins right now are at 0.43, right? If we get a weekly close at 0.39, that should raise some eyebrows, right? Again, am I suggesting that it has to mark any major milestone in Bitcoin USD? I'm not saying that it has to, right? All I am saying is that it did last cycle. But again, every cycle is somewhat different, This cycle is different in the sense that Bitcoin is at all-time highs on some valuations, not on the US dollar yet, but on some valuations, Bitcoin's at all-time highs, and we're not even at the halving yet. So in that sense, Bitcoin is already doing something different this time than it has in past cycles. But be that as it may, it's important to remember, right? It's important to remember that at least last cycle, when all Bitcoin pairs broke down, Bitcoin cooled off for a bit, right? Now, I know some people are saying, it's up only, you got all the spot ETF stuff and everyone's piling in. Again, I don't know, right? I don't know how high it's going to go. I'll just DCA out as the risk levels go higher. But I am saying that, Bitcoin did cool off a little bit after all Bitcoin pairs broke down last cycle. That's all I'm saying, okay? Overlay Bitcoin USD. Don't take it up with me. Take it up with the data. And again, this time could be different. I don't know. It's just that when altcoins broke down last cycle, again, how can I not follow this up? We've been talking about it for 2 years now. When altcoins broke down last cycle, That marked the local high for Bitcoin. Now, Bitcoin didn't go put in a new low, right? But it did cool off for a few months, right? When altcoins broke down against Bitcoin. So I'm just saying, hey, it's something that we should look at, right? Have they broken down yet? No. I've said that for the last, year. They haven't broken down yet, implying that there's still some liquidity to go back over to Bitcoin and act as fuel. Hasn't broken down yet. Maybe it will tomorrow. Maybe it will next Tuesday. Maybe it will in April. Maybe it doesn't, and this time's different. But again, we're not that far away from that milestone. The breakdown of altcoins. All those videos I did on the altcoin reckoning, and how many times I said the altcoin reckoning is not the devaluation of altcoins on their USD pairs. The altcoin reckoning is the devaluation of altcoins on their Bitcoin pairs, right? That's what the altcoin reckoning is. It's where all this liquidity flows back to Bitcoin, and everyone who's been DCing all these altcoins, they just look over at Bitcoin and they're like, well, hell, I could have just got that. Again, I know some of these altcoins are doing pretty well out there, guys. I know some of them are doing fantastic. And if you've been buying those, congratulations, right? I mean, props to you. I tip my hat to you. There's always some that outperform Bitcoin. But we are not that far away from altcoins breaking down on their Bitcoin pairs collectively. At least total 3 minus USDT divided by Bitcoin, right? We're not that far away from that milestone. And it could come quickly, it could come this week, could come next week. I don't know, but we're not that far away from it. Now, we are far away from some other things. So ETH Bitcoin still has a ways. I mean, ETH is going to be the last one to fall on its Bitcoin pair more than likely, because it is number 2 by market cap. And I don't think ETH is going to relinquish that number 2 spot anytime soon. I also don't think it's going to be flipping Bitcoin anytime soon. Probably not ever. But here ETH Bitcoin is at 0.053. It would need to drop a little bit more to get that weekly close below its range low that it put in the summer of 2022 at 0.049. But remember, last cycle, when all Bitcoin pairs broke down, ETH Bitcoin did not break down. In fact, it took another 2 weeks for ETH Bitcoin to break down. So the implication of that is that altcoins could easily break down before ETH breakdowns. I don't really refer to ETH as an altcoin for those that are curious what I mean by altcoins and not ETH. When I say altcoins, I mean everything besides Bitcoin and ETH. I consider ETH the blue chip. The reason I haven't been very optimistic about ETH for a long time is because I just keep thinking it's going to bleed against Bitcoin. If I think it's going to bleed against Bitcoin, why not just have Bitcoin over ETH? Ever since the merge, people tell me how crazy I am because, all the deflationary stuff, tokenomics, et cetera. I mean, it's still down 38% since the merge, right? Against Bitcoin. Wasn't wrong to be bearish on ETH Bitcoin. Down 38% since the merge. Now, a lot of people will say, but ETH outperforms Bitcoin in the bull market, right? And while that may be true, we should remember that there are 2 types of Bitcoin bull markets. There are 2, and a lot of people only are familiar with one. And what people are familiar with is the QE bull market of 2021, right? That's what most people are familiar with. And that's why everyone says that, well, ETH is going to outperform Bitcoin in the bull. I'm not disputing that Ethereum could eventually outperform Bitcoin. What I am disputing is that the type of bull market that we're in has been a QT bull market and not a QE bull market. And the reason that's important is because in QT bull markets, ETH Bitcoin bleeds, just like it did over here in this QT bull market. But in QE bull markets, ETH Bitcoin goes up as Bitcoin USD goes up. Do you see the difference? Now, if you're not familiar with what QE and QT are, QE is quantitative easing, QT is quantitative tightening. So if we were to overlay total assets held by the Federal Reserve, you can see very clearly, right? Very, very clearly, where did ETH Bitcoin bottom out last cycle? It bottomed out precisely, and I mean precisely, when the Fed went from QT to QE. That is where it bottomed. Not before they pivoted, not after. Basically, the week that the Fed went from quantitative tightening to quantitative easing in 2019, that is where ETH Bitcoin bottomed. But everyone that joined crypto in 2020 and 2021, they keep telling me that ETH Bitcoin is going to go up because that's what it does in a bull market. I'm like, well, yeah, maybe in a QE bull market. But what about a QT bull market where you are seeing the Fed tighten? When the Fed tightens, dominance of Bitcoin goes up when Bitcoin USD goes up, and ETH Bitcoin bleeds. So yes, at some point in the nebulous future, the Fed will pivot. And at that point, it's possible that ETH Bitcoin will bottom. But how can we say that ETH outperforms Bitcoin in a bull market when Bitcoin has been basically going up only for over a year, while ETH Bitcoin has been going basically down only for over a year, all while everyone's saying that ETH Bitcoin is holding up well. But it's still down 38% against Bitcoin. It's still down 38%. So that there's a clear distinction, right? And that's why everyone has been, so many people have been fading the dominance rallies, because they just think, well, altcoins outperform Bitcoin in a bull market. In a QE bull market, when the Fed prints $6 trillion, yeah, everyone just goes and buys their meme coins of the day, and they durably outperform Bitcoin for a year, right? But late cycle QT, high interest rates, 2019 showed us that ETH Bitcoin is going to bleed. And guess what it's done again? It's bled, right? It's bled. And eventually, it broke down. And what's fascinating is that when it broke down, right after it broke down, the Fed went from QT to QE. The Fed has started saying they're going to start talking about the balance sheet issues, right? So probably coming to us later this year, but it hasn't happened yet, And if it hasn't happened, and if all Bitcoin pairs haven't yet broken down, listen, think about it like this. If altcoins have not yet broken down against Bitcoin, then it implies there's still liquidity sloshing around in very dubious of places. The altcoin market. I'm sure the Fed is thrilled that these meme coins are up 100% today. I'm sure they're thrilled. But if there's that liquidity sloshing around, then it implies, the Fed, the rates where they are still need to do some work. And if they fall, if the second crypto asset falls to the king, then it might imply that the Fed has gone too far. Now, you might say, Ben, the Fed doesn't care about our altcoins. I agree. They don't care about our altcoins. But what it represents is basically just breadth collapsing, right? It would represent the breadth in the cryptoverse collapsing if number 2 falls to number 1, right? We've already seen a lot of other altcoins fall to Bitcoin. ETH is still trying to hold on, and the degens will hold on as long as they can, okay? They will hold on as long as they can. But I think it's a losing battle. I think ETH Bitcoin will eventually break down. And normally it's on a Bitcoin rally. Now, do you remember where we talked about alt Bitcoin pairs? How in 2019, when altcoins broke down against Bitcoin, that marked a local top for Bitcoin USD? The reason why I've said before, risk on until 56% dominance. Once we get to 56% dominance, then I think we have to take a step back and say, all right, now what? Right? What happens at 56%? What does Bitcoin USD do on the journey from 56% dominance to 60% dominance, right? What does it do during that time? And there's really 2 examples, because, alt Bitcoin pairs in 2019 show us 1 example, but we should also be aware of what happened over here in 2016 when ETH Bitcoin broke down. Do you remember when ETH Bitcoin broke down in 2016? I'm sure some people were in crypto back then, but what happened was it broke down on a Bitcoin rally, just like it broke down in a Bitcoin rally in 2019. But in 2019, it marked the top for Bitcoin USD. But in 2016, Bitcoin USD continued to rally on up. So with that in mind, right? With that in mind, I'm not saying that definitively if alt Bitcoin pairs break down, it has to be the local top for Bitcoin. What I am saying is that that's what happened in 2019, but also take a look at what happened in 2016 for a potential counterpoint. And that's this counterpoint right here, right? In this case, when ETH Bitcoin broke down, Bitcoin still went up. What's fascinating about this breakdown is that when ETH Bitcoin broke down, it happened to correspond to Bitcoin hitting $747, right? 747, around 740, around 740 or so. When it hit 740, that's when ETH Bitcoin broke down. 740. Why is that interesting? Well, we're knocking on the door of 70K. Again, I don't know if we're going to make it on the first attempt. Maybe we get rejected on the first attempt and then try again later. I don't know, right? I have no idea. But that is where ETH Bitcoin broke down, was when Bitcoin USD hit around $740. Now, there's a little bit of confluence there. And the confluence in that is this. If you go look at total market cap, so total market cap, what do you notice about total market cap? Everyone's been talking about the fib retracement stuff, right? I mean, everyone and their, and their friends, everyone looks at the fib retracement stuff. But, and again, last cycle, if you look at the fib retracement stuff, where did total market cap top out? At the 4.236, right? That's where total market cap topped out, at the 4.236. Where did Bitcoin top out? Did it make it to the 4.236? It did not make it to the 4.236. Where is the 4.236? 74K. Huh. That's kind of interesting, right? Because 74K is 100x, right? That 740 mark where ETH Bitcoin broke down in 2016, right? So I'm starting to wonder, I mean, is it a combination of 2016 and 2019? Right? Are we going to see this move by Bitcoin? It sucks in that liquidity from the altcoin market, and it breaks the altcoins down on their Bitcoin pairs, and then everyone celebrates, and Bitcoin is only ever going to go up, and then something happens, right? And a local top is in for a while, and maybe the local top ends up happening because I don't know. It could be because the Fed's pivoting. It could be because there's some labor market data that doesn't look that great, or maybe hell, it drops some because we just went up 300% without a really big pullback. Maybe that's why. All sorts of reasons, right? But there's a little bit of confluence there, right? There's a little bit of confluence at that sort of that level. So I think it's interesting. Now, there's something else I was looking at with regards to Bitcoin USD, and this is something I talked a little bit about in early 2021 when Bitcoin was going on this parabolic rally, and I was kind of scared to talk about it back then, and I sort of mentioned it at a live stream, and it was largely ignored. But you guys know about the short-term bubble risk, right? It's the extension from the 20-week moving average, right? And so if you look at the extension for the 20-week moving average, you can see that from one cycle to another, the extension diminishes with time, right? It's diminished volatility, right? You can see it pretty clear, right? Diminished volatility. But there's not a really clear trend line here. But there's a trick we can do, right? And that trick is to take the natural log of the price over the 20-week moving average. If you do that, a trend emerges. And a pretty consistent and clear trend at that. And that's this trend right here, right? Where when the extension from the 20-week SMA hits this trend line, it means that Bitcoin is due for a larger pullback, right? Exhibit A, Exhibit B, Exhibit C, doesn't even make it there. This one, and then there's two in here, right? This one was tricky in 2021 because it hit the trend line in January. It came back down and then hit it again. And because Bitcoin's 20-week SMA had gone higher from January to February, it allowed the Bitcoin price to go higher because the extension could be the same without it meaning even at a higher price. So we are approaching that level. Now, again, it depends on how you want to draw the line. We could draw it any sorts of ways. If we just connect, say, this data point to that one, it would imply there's a little bit more upside. If you connect it over here, you could argue that we're already there, right? We're going to do it both ways and just go through a brief exercise, right? So if you connect it to that data point and you just sort of connect that dot, like this one, and this one, you can see that these swept that line, and now we're there right now, right at the all-time high. Remember, when gold first, you guys are probably like, what the hell is he doing talking about gold? When gold first hit the all-time highs, right, it briefly surpassed them and then got rejected back down. Okay, so if you connected like that, we're already there. But for the people that want more, right? Right, everyone's greedy. We're all degens at heart. By the way, the fear and greed index is at 90. We'll talk about that a little bit later too, but it's at 90. So guys, I know it's crazy. I mean, I get it. Bitcoin's pushing all-time highs. The same time, you know, there's a lot of other stuff going on, and everyone's super excited. Hell, I'm doing a live stream because everyone's asking me to do one. Fear and greed's at 90. Talked about that too. But sometimes after the fear and greed index goes in the 90s, it stays there for a little bit of time, right? In 2019, it went to 95. In 2020 and 2021, it went into the 90s and stayed there for 3 or 4 months. So let's suppose we take this trend line to humor our more adventurous friends and say, well, where would the price of Bitcoin be if it hit that trend line? Where would it be? At what price would that correspond to? Well, it's simple, right? I mean, you just take the natural log of the price over the 20-week moving average and you solve, right? for what X would be. So in this case, we're going to say, well, the natural log of the price. So we don't know what the price is going to be. So we're going to solve for that over the 20-week moving average. So what is the 20-week estimate, right? Well, right now, the 20-week estimate is 44,367. So what we're going to do is we're going to say the natural log of 44,367. 44,367. Bitcoin is currently $25,000, almost higher than the 20-week moving average. It shows you how far extended we are. But again, log of the price, log of X divided by the 20-week moving average equals 0.55, 0.54, 0.54 equals 0.54. So where would that put Bitcoin, right? It would put it at 76K. So in that case, right, in that case, if it were to hit that trend line, you know, Bitcoin, and again, you can draw it any sort of way. I mean, you can even narrow this down a little bit and say it'll hit it at 0.53, right? It doesn't take a lot to move the needle. But you could say 0.53, 75K. You could say all sorts of things, right? I mean, you could say 0.52, you could say 2.0 if you want, because, you know, you think the spot ETFs are going to be a complete game changer. But it gives you an idea, right? And if you look at gold, when it broke its all-time high, it actually extended up about 7 to 8%. You know, Bitcoin, if it were to extend above the all-time high, 7 to 8%, you know, I'd put it at like 73K or so. Or is that 73K again? So again, I don't know if we're going to go into the 70s or not. What I will say is that in last cycle, Bitcoin stayed risk on until alt Bitcoin pairs broke down. It stayed risk on too until ETH Bitcoin broke down, but it wasn't putting in new highs. So I mean, it was still kind of going up and putting in lower highs, but it wasn't, you know, it hadn't gone below the 20-week moving average, which is what I mean by risk on, risk off. Generally speaking, not always, but generally. So there's a lot of confluence, right, in that area. And so, you know, I go back to this idea of like, well, I mean, everyone obviously wants to see Bitcoin go up forever, but will there be pullbacks along the way? Of course. When are those pullbacks going to come? I don't know. I know that in 2019, Bitcoin locally topped when all Bitcoin pairs broke down. I know that in 2019, Bitcoin locally topped when gold broke out, but it did not top the day that gold broke out. It topped a week later, right? It topped a week later. And right now, I don't really know if we can even say that gold is broken out. I mean, I think you could make that claim. Maybe we make that claim, but you could also say maybe it has to go up here to break out, you know, like above 2144. I don't know. It kind of looks like it's breaking out to me, to be completely honest. It looks like gold's breaking out, right? If this were a crypto chart, every last one of you guys would be saying it looks like it's breaking out. But because it's gold, it is what it is. But again, that's what I'm just saying. I'm not saying, know what I'm saying, right? I mean, the point is, it looks like gold's breaking out. And in 2019, when gold broke out, Bitcoin had a little bit of time to go up a little bit longer, and then it cooled off for a little bit, right? So again, like pulling up Bitcoin USD and overlaying gold onto the chart, looking at the last cycle, seeing when gold finally broke out, going the trend line up. You can see that Bitcoin rallied about another week or two after gold broke out. And so, right, I mean, if you're just kind of looking at the same thing now, let me go to the daily time frame to actually pick up more of those wicks. Right, there's been a lot of false breakouts by gold, right? I mean, you've probably seen a lot of people say, oh, gold's breaking out, right? Because it looked like it was breaking out in December. It looked like it was breaking out in later December. It looked like it was potentially breaking out in January. And it looks like it's breaking out again, but maybe we're going to wake up tomorrow and it'll have been broken down again, and it'll be a false breakout yet again. But what if it's a real breakout, right? What if it is a real breakout? Does that set the timer? And why is gold breaking out, right? Like, what is the reason for gold breaking out right now? Right? I mean, all the news basically is saying that everyone's selling their gold, their spot ETF, their ETF, their gold ETFs, and just going over to Bitcoin. So if that's the case, why is gold breaking out? Well, I'm glad you asked, right? The reason that gold's probably breaking out is because it senses that QE might not be as far away as we think. And maybe it senses that because the labor market is showing some weakness. I mean, the delinquency, bankruptcies and stuff are going up, right? Again, guys, I know we can ignore it all we want. And, it's a lot of our first business cycle, is certainly mine. But again, if you were to look at bankruptcies in the United States, they're going up, right? I mean, and again, I don't know how long the market's going to ignore it. It's been ignoring it for a while, but they're going up, right? And so maybe that's why gold's breaking out, is because, well, they're probably saying, well, how long can the Fed do this? How long can they stay higher for longer, right? How long can they possibly keep this up? Because every week that goes by, there's more layoffs. Every week that goes by, there's another company going bankrupt. So I mean, that's why gold's breaking out. And we're all over here looking at the meme coins and saying, well, there's no way in hell the Fed can pivot anytime soon. And maybe they don't pivot anytime soon. But in 2019, Bitcoin topped in June and the Fed cut rates in July, right? And there were a lot of meme coins going crazy back then. And then they fell off a cliff. So again, the point is, it's about why is gold breaking out, and is it a false breakout, or is it legitimate? If it's a legitimate breakout, then it's concerning for risk assets. If it's a fake out, like it has been the last couple of times, then maybe the party keeps on going. And remember, last time in 2019, on the breakout, Bitcoin had about one more week before. And again, it didn't go put in new lows, but it cooled off for about half a year, right? So we've looked at the extension from the 20-week moving average. We've looked at ETH Bitcoin, and I don't know how long you guys are going to keep it going, but I mean, if you just let it, if it drops down to 0.03 to 0.04, then maybe it can bottom there. I don't know. That's been my target on it for a long time. I could be wrong, right? I could be spectacularly wrong about that. And I'm sure people will dunk on me like usual if I am. But again, it doesn't change the fact that the people dunking on me were bullish on ETH Bitcoin during the entire downtrend. Okay. So I do think it'll break down. I don't know if we have to wait until May for it to break down, or if it can just break down in March or April, or even June. I don't know. Remember, ETH Bitcoin last cycle broke down the same month that the Fed cut rates, right? ETH Bitcoin broke down in July. The Fed cut rates in July. ETH held on longer than the altcoins did. And when ETH broke, that's when the Fed pivoted. The problem with the idea that ETH, it doesn't really look like the Fed's going to pivot in March. I mean, the market's saying 97% chance that they hold steady. And who can blame them? I mean, how can you blame them? You got these meme coins shooting up 100% a day. I don't think Powell's looking at that and saying, well, hell, we need to go to lower rates. May, 77% chance that they stay, right? So could it be until June? I don't know. What I do know is that these probabilities are about as useful as altcoins in a Bitcoin dominance uptrend, right? It's just the probabilities have been wrong forever. The market has been wrong forever about rate cuts, right? When back in 2022, when I said that the Fed funds rate needed to go to 5.5%, or was likely going to go to 5.5%, it took the market a long time to come to terms with 5.5%, a long time. And so I think one of two things going to happen. You could even get to the point where a lot of the rate cuts get priced out, and it could be the evolution of them getting priced out that causes them to get priced back in, right? I mean, imagine if you're a small business and you go from thinking you're going to have a rate cut in March to then thinking you might not get one at all this year. That would lead to some layoffs, right? That would lead to some cost cutting. And then it could be that causes the rate cuts to just get priced back in. So there's a lot of things to look at, right? I mean, and again, it seems like there's a crescendo here, right? What is that crescendo? It is the fact that Bitcoin is approaching all-time highs at the same time where Bitcoin dominance is approaching its breakout zone. And remember, when it broke out in 2019, that's finally when Bitcoin cooled off, after Bitcoin dominance broke out. It was on a Bitcoin dominance breakout. It was when all Bitcoin pairs broke down. That is what marked the local high for a while, right? We still took out those highs later on. I can't possibly imagine that everyone watching this video thinks that Bitcoin's just going to go up like it's going up right now for the next 2 years without any pullbacks. So I would look at that and say, we're getting close, but we're not there yet. We're not that far away. So you have this confluence of Bitcoin dominance approaching the breakout point at the same time where alt Bitcoin pairs are starting to break down. Look at that. It's back down to 0.34. When I started the stream, the alt Bitcoin pairs were up like 1%. Now they're down. Now they're only up a third of 0.4. Probably by the end of the day, the alt Bitcoin candle will be red, right? And then the people dunking on Bitcoin dominance will wait for another day to dunk on it. But you have alt Bitcoin pairs nearing the lows. You have Bitcoin dominance nearing the breakout point. Nearing these lows. You have Bitcoin dominance nearing the breakout point. You have gold breaking out. ETH Bitcoin, stubborn as it is, still not at the range lows. But remember, last cycle, it took an extra 2 weeks for ETH Bitcoin to break down. And maybe it even takes longer this time for it to break down, given the spot ETF stuff for ETH potentially coming, which I don't know if it's going to be approved or not. I don't think the odds are as likely, that it was for Bitcoin. I think Ethereum should be a commodity, but who am I to say what it should be? I think that the SEC could try to say it's not as clear as Bitcoin, and they might try to kick the can down the road, and maybe it takes another year for it to be approved. The Bitcoin spot ETF took forever for it to be approved, so it could take we could end up waiting for Ethereum's for a much longer period of time than we'd like. But Ethereum's Bitcoin valuation is breaking down to the range low. So you have ETH Bitcoin breaking down. You have alt Bitcoin pairs breaking down. You have Bitcoin dominance breaking up. You have gold breaking out. And to top it all off, you have the fear and greed index in the 90s. The cherry on top. The fear and greed index, though, is not something you can take to the bank because if you look at it, the raw values of it, if you basically sold all your Bitcoin when the fear and greed index hit 95 in 2019, you would have timed the top perfectly, right? And then you watch Bitcoin drop 72%. You would have timed the top perfectly. But if you did the same thing in 2020 and you sold all your Bitcoin when it went into the 90s, you would have sold all your Bitcoin right around the time that Bitcoin broke to new highs, right? Kind of similar, right? I mean, we're about to, we're knocking on the door of new all-time highs right now, right? So which is it, right? Is it 2019? Is it 2021? I'll give you a hint. It's 2024, right? It's neither. It's something different. It's kind of a combination of the two, in fact, right? It's not so clear. 2019 was QT and high interest rates. 2021 was QE and low interest rates. So in that sense, we're more like 2019. But 2019, we were not flirting with all-time highs. 2021, 2020, we were. That's more like 2024. So which is it, right? All Bitcoin pairs broke down. ETH Bitcoin broke down in 2019, and that's what marks the local top for Bitcoin USD. ETH Bitcoin broke down in 2016, which happened to also be a halving year like today, and Bitcoin kept on going up, right? So again, it's not so clear, right? It's not so clear to say it's 2019 or 2021. It's 2024, right? It's different than both of them. It's kind of a combination of the two, right? There's elements of both that go into it, right? It's QT and high rates like 2019, but it's flirting with new all-time highs like 2020, like late 2020. So you could get a combination of the two, right? I mean, maybe Bitcoin goes above the all-time high and then goes up a little bit higher, right, into the 70s before it gets a pullback. Right? That would be kind of a combination, right, where it doesn't top exactly when all Bitcoin pairs break down, but it also doesn't just go parabolic forever before pullback. So there's certainly different, there's certainly different things you could look at. And by the way, I mean, the sort of the elephant in the room that I know we're all going to ignore until it's probably too late is the fact that for the first time in Bitcoin's history, save the pandemic, the labor market is starting to turn the wrong way, right? Again, we can ignore it, and I'm sure many of us will. But, for all of Bitcoin's history, the unemployment rate has just gone down. It's slowly turning the corner. But who knows how long it takes for this thing to turn? Maybe it turns in 6 months, 3 months. Maybe it's another year and a half before it turns. I don't know. But it's starting to turn. And so, I mean, I imagine the path to a hard landing is not something that everyone thinks is a hard landing, but we'll leave it there. I'm not going to dwell on that too much right now. But again, you guys know the risks. So right now, Bitcoin is still at 68K. I don't think I've missed anything. What are some other things that we could look at? We could look at, I guess we could check with the Pi cycle top on the daily. It doesn't really seem to be that close to hitting. Let me go over to the website. So yeah, you have the fear and greed index at 90. We have, let's go, you guys, these heat maps are pretty cool, right? You can actually move it over to the square root of market cap so you can see what's going on. Also, we have this category, so you can actually sort by category. So like if you're interested in, say, like the Ethereum ecosystem, even though they're basically all bleeding to Bitcoin, you can kind of see like what's going on, like who's who and what's one in the ether space, right? Or if you want to go look at like layer 2s and see what's going on today. Matic is something that's kind of interesting because I've been arguing forever that might lead ETH Bitcoin, right? Look at Matic Bitcoin. 1631. Everyone's been telling me that it's going to hold the lows. It looks like Bitcoin's breaking it down, does it not? Tell me, right? I mean, it looks like it's breaking down. It looks like despite all the people that have DCA'd Matic for the last 2 years, they would have been better off just buying Bitcoin because Matic Bitcoin is at a lower level now than it has been since May of 2021. And that's why I said before, right? Bitcoin heavy crypto portfolio until Bitcoin dominance hits 60%. That's my view, not financial advice. You can do whatever you want to. But the altcoins that are outperforming Bitcoin, there's some survivorship bias there where people say, yeah, this altcoin's outperforming. So what? There's 10,000 that have it. Matic Bitcoin is breaking down. And this is not just one that people are going to say is a dinosaur one, right? It's relatively new. And a lot of people have been very bullish on it, but it is still breaking down on its Bitcoin pair. And the argument is that it might be leading ETH Bitcoin to break down. Aave Bitcoin broke down long ago, right? I mean, it didn't even put up a fight, really. I mean, it just keeps on breaking down. Anytime altcoins surge, the dunks come out. But I mean, look at AVAX Bitcoin. Had a great rally, right? Great rally. It's just slowly bleeding back down. This is what happens in crypto, guys. Altcoins inevitably bleed back to the king. That's just what happens. I don't make the rules, right? I don't, but I do enforce them, right? And over a long enough period of time, all Bitcoin pairs break down. XRP is a great example. I mean, like XRP, how it actually put in new highs in its second cycle, if you want to call it its second cycle, right? It put in a high here, came all the way down here, back down to the range lows, and then went back up to the range highs. But it didn't even visit the range highs in 2021 and 2020. And look at it. I mean, it's coming back down to the range lows. Maybe it'll bounce there. Who knows? But if you bought XRP back over here in 2017, you're now down 96% against Bitcoin, right? If you bought Algorand in 2019, it's down now 99% against Bitcoin. So yes, you can go look at these things on their USD pairs and say, oh, look, Algorand's up from the lows 200%. So what? It's down 99% against Bitcoin, right? Next cycle, I don't think I'm going to talk about Bitcoin dominance at all. I'm not, because it's too stressful. No one really cares about it. Everyone dunks on it. When it goes up, people get quiet. When it goes down, people dunk. And at the end of the day, most people just care about USD valuations, right? They look at this stuff, right? And they just say, oh, well, my altcoin's up against the US dollar over the last couple of weeks. That's great. It's still been bleeding against Bitcoin for the last 3 or 4 years. So what do you want me to say? Congratulations. You made less money than had you just been with Bitcoin for the last 4 years. And you took on more risk, right? So not only did you take on more risk, you saw a lower return. The modern portfolio stuff, I mean, it's based on classical theory, right? This the modern portfolio theory tab, right? It's based on classical theory in the stock market, right? This is from a paper from like the 19 I don't know, is it maybe the 1970s? It was several decades ago, right? And again, like if you include a lot of these older coins in here, it's still going to say that Bitcoin, to maximize your risk-adjusted returns, should be the majority of your portfolio, right? Even if you look at ETH. And again, the reason, if you add in Litecoin and XRP and whatever else, the reason is because over a long enough period of time, a lot of the altcoins bleed back to Bitcoin. There might be 1 or 2 cycles where they don't, but that's the trick with the Cryptoverse, is that it's not about the USD valuation, right? It's about, do you preserve the Satoshi value of your portfolio, right? Do you preserve the Satoshi valuation? So it's fun to ride the altcoins up, but occasionally taking profits back to Bitcoin is, in my opinion, not financial advice, the long-term winning strategy. Because if you don't, what ends up happening is that a lot of them just bleed against Bitcoin forever. Monero was a great, and guys, I have nothing against, I honestly have nothing against Monero, right? Nothing against it. And in fact, if you look at the USD valuation of Monero last year, right? Last year, it was doing pretty well, right? I mean, for a while, it was actually outperforming Bitcoin. But look at it now. Right? Last year, everyone was telling me, well, what about Monero? Look at this. It's up, it's up 150% against Bitcoin. Look at it now, right? Now from the highs, it's down 94%. The altcoins, they lure people in. People make a lot of money and then they lose a lot of money. The trick with crypto, if you're gonna buy altcoins, taking profits is essential, and especially taking profits back to Bitcoin, sort of the standard that you're using, right? Going back to Bitcoin is the way of the Cryptoverse, right? Because if you don't, and you look back on these altcoins in 10 years, I can basically guarantee you that at least 99% of them are going to look exactly like this. At least 99%. For everyone that, dunks on Bitcoin dominance, right? I mean, look at any altcoin dominance. Most of them, they'll stay elevated for a little while. Eventually they bleed. So, going back to Bitcoin and where it is right now, what I think needs to happen here, I think it needs to break altcoins down against Bitcoin, right? That's what I think it needs to happen. And we're at 42%, right? We're at 0.42. We only got to go to 0.39 for them to be broken down. It's not that far. And we wicked to 0.39 last week, right? Here, I know this is a show up because it happened on a really short period of time. But for like 10 seconds, I saw 0.39. I took a screenshot of it. I have proof. I think we can actually see it if maybe you go to like an hourly chart or something. You'll have to take my word for it. Okay, you have to take my word for it. It happened. That's my story, and I'm sticking to it. So we did go to 0.39 last week. I saw it. I don't care what the chart says. We're not that far away from it, right? So if Bitcoin does break the high, and if it goes into the 70s, like I don't know. I don't really know where, but let's say it goes into like 73, 75, somewhere like that. I mean, again, gold went about 7 to 8% above its high before it got a larger pullback. I have to imagine that if that happens, that alt Bitcoin pairs have broken down. Like I have to imagine that. I don't think that altcoins can compete with Bitcoin in this environment. In the same way, and again, I'll go back to this example just to provide countless examples. In the same way that these alt EV companies can't hold value against Tesla, right? Rivian can't hold value against Tesla. Maybe it's trying to hold the range lows, but look at this. I mean, what do you do with this, right? I mean, Tesla's down, 50% from the highs. And Rivian Tesla is down 90%. So Rivian is down 90% against something that dropped 50%, right? Alt EV bleeding to the blue chip EV. Altcoins bleeding to the king. The Russell bleeding to the NASDAQ, right? This is what happens, right? And a lot of people look at this like net liquidity stuff, and I've been very clear about net liquidity. A lot of people look at this net liquidity stuff and they say, well, no, I mean, it has to track the S&P 500. It doesn't have to track anything. And again, I've said before that the jaws will open on this stuff, right? That's what they normally do. Is if you look at the S&P and net liquidity, you can't use it to tell you where the S&P is going to go, because eventually the jaws will open, and it can take years before the jaws clamp shut. But what you can use it for, what you can use net liquidity for, is to see altcoins bleed against Bitcoin, right? You can see that as net liquidity goes down, so too do riskier assets against safer assets, right? You can see the same thing with the Russell, right? The Russell divided by the NASDAQ, right? As net liquidity goes down, so too does the Russell valuation against the NASDAQ. Because, as we've said, if we do go into hard times at some point in the future, let me say when we go into hard times, right? It's always an ebb and flow, right? We go from extreme fear to extreme greed, right? When we go into hard times in the future, whenever that might be, then during that time, we want to say which of those assets will survive. Will Apple survive? Will Google? Will Microsoft? Will Nvidia? Yeah, probably, right? I mean, they have a pretty good cash, they have a pretty good balance sheet. Do any of us think that Apple's going to go belly up if the economy slows down for a few quarters? No one thinks that, right? And if they do, then I don't really know what to tell them. They probably also think that all Bitcoin pairs have been bullish for the last 2 years. The thing is as we go tighter and tighter monetary policy, you don't even have to raise rates to go into tighter monetary policy. You just hold them at a restrictive level. We don't even know where the neutral rate is. I know a lot of people sort of estimate it to be around like 2 or 3%, but it might be higher. If we go into harder times, when you want to make sure that what you have in your portfolio is something that can survive it, right? And who the hell knows if any of these alt EV companies can survive? Who knows if Lucid or Rivian or Neo or any of these can survive? I don't know. I sat in a Lucid. I thought it was a nice car. I hope it survives. I think competition would be great, but I don't know if they're going to survive or not. I hope they do, but I don't know, right? I don't know if they're going to survive. Will meme coin number 378 survive? Who knows? Will Bitcoin? Probably, right? So that's why during higher rates and during quantitative tightening, right? That's why you see these riskier assets bleed to the safer assets, right? That's why altcoins bleed to Bitcoin. It's why Rivian and Neo and Lucid are bleeding to Tesla, even though Tesla's going down. And it's why the Russell is bleeding to the S&P and the NASDAQ, because no one knows if those companies are going to survive. But they know that Apple will survive, right? They know that Tesla is very likely to survive. And the thing is if Tesla can't survive, then there's likely no way the other ones are surviving, right? And I think Tesla will survive. And the same thing with Bitcoin, right? I mean, it's the whole idea behind the dominance rally, right? And again, the whole idea behind talking about dominance nonstop for 2 years is how do you preserve the Satoshi valuation of your portfolio? You stay Bitcoin heavy until the dominance rally is over. How do you know when the dominance rally is over? Well, it probably is going to happen sometime after alt Bitcoin pairs break down and after a Fed pivot. It historically hasn't occurred before. It could occur before, but so far, fading it occurring before has been the correct move as the Bitcoin dominance continues to go up. So a lot of stuff, right? And again, we can go look at some of this other stuff. You know, one thing to look at, so the risk on Bitcoin right now, for those that are interested, is 0.722. If you isolate just the 0.7 to 0.8 risk band, that's what you get. Okay. So this is just the 0.7 to 0.8 risk. And, you know, you can see that it hit it here and then it hit it again a little bit later. In 2021, we hit it in August and then we hit it again in like November, December. And then here in 2021, or so that was 2017. And then in 2021, you can see we hit it at around 27, 28K. We still went up another 2X after that, right? But it does show you that in terms of time, you know, you have anywhere from a few days to a few months before there's going to be a larger pullback. I know you're probably rolling your eyes like, well, that doesn't help me. Okay, I don't know. I don't know how long it's going to go, but it just kind of give you a visualization. Now, if you make it to the 0.8 to 0.9 risk band, you can see that it's tighter. And the 0.9 to 1 happens even less frequently. But there's no guarantee you make it there, right? You didn't make it to the 0.8 to 0.9 risk band in June of 2011, right? You made it to the 0.8 to 0.9 one, right? So you have to remember that. And the 2019 rally, also during QT and high interest rates, we only made it to the 0.6 to 0.7 risk band, right? We didn't even make it to the current risk band that we're in at 0.722. So that's where the current Bitcoin risk is 0.722. If we were to look at the year-to-date ROI, 2024, we're currently outperforming 2023 right now. If we compare it to 2021, we're underperforming 2021. We're still outperforming 2020. We are outperforming 2019. Obviously, we're outperforming 2018 and 2022. We are outperforming 2017 at this point. Outperforming 2016, outperforming 2015, and 2014. Hell, we're even outperforming, or no, we're underperforming 2013. We're underperforming 2013. 2012 outperforming, 2011 underperforming, right? So here's 2013. You can see in 2013, Bitcoin had a parabolic rally up until about the 100-day mark, right? So basically till the end of March is essentially how long that rally lasted. And then after that rally finalized, it then cooled off for like half a year, if not longer. And then it got another rally later on in the year. But again, it's hard to say exactly how high it'll go. I mean, you can see that it's not keeping pace with 2013, but we shouldn't expect it to, right? I mean, market cap was a lot smaller back then, so we shouldn't expect it to keep pace with it. But it is something to note, right? I mean, you know, we're currently on day 64, right? And I mean, you know, this goes out to day 99. So you're talking about, you know, just over a month or so before potentially reaching that same kind of time frame, which also corresponds to just before the Bitcoin halving. So someone says, so all altcoins are worthless. Look, guys, I'm just saying that over a long enough period of time, a lot of them just bleed back to Bitcoin. That's the point. So again, that's the year-to-date ROI stuff. There's another interesting chart, and that's the let me just go check it on Bitcoin. I don't want to miss anything. No, we're at 68. There's another one that you can look at, and that's the ROI after the bottom. And you can see that we are very much ahead of the last two cycles, right? Very much ahead. And in fact, from the current point, we're currently on day 481. It took the last two cycles up until day almost 700 to durably get above this level. right? Almost another 200 days before it durably got above the level that we're currently at right now. So if there is some type of run of the highs, whether we hit the highs or not, or maybe we go into the 70s and we get a pullback, you could certainly go into a cool-off period for half a year, right? So think about that. And the other thing is, if you actually, you guys remember how in 2021 there was the April top and then there was the November top. If you measure it from April, or sorry, this is from the low. If you measure the peak, if you measure the ROI from the peak to peak, we're well ahead of schedule. In fact, at this point in the last 2 cycles, Bitcoin was it was basically at 0.36 or 0.37. That means it was still 63 to 64% below the lows in the last 2 cycles at this point in the phase of the cycle, right? To give you an idea of where that would put Bitcoin, again, I'm not saying we have to go there, but like a 63 to 64% drop, right? That puts you back at 25K. Relative to the prior peaks, that's where Bitcoin was in the last 2 cycles, was at that point. So we are well ahead of where we were in those 2 cycles, well ahead. And in fact, in the last cycle, it took us until day almost 1100 to get to the point that we've reached by day 848. So 250 days ahead. In the cycle before that, it took us 1182 days. So an extra 340 days or so to get to this level as measured peak to peak. But there's another way to look at it. I'm not asking you to take this to the bank. Please don't. It's not my base case. But do you guys remember how everyone, including myself, said that April was a more legitimate top, right? April was a more convincing top than November. November felt forced almost, like it was doing something it wasn't really meant to do. Price action is king at the end of the day, so we have to respect the November top. But what if we assume that it didn't put in a new high in November? What if we assume that the high was in April? Well, if you take the high from April, which we can do, it then shifts the green line all the way out here. And then when you look at it like that and you compare it to the last cycle, you're like, well, hell, it's not that different, right? Now there is an element of diminishing returns, right? I mean, it's not like we've experienced non-diminishing returns. Every cycle we've had diminishing returns. Every cycle people argue that we won't have it, and then we do. And I'm sure that same argument will happen. And maybe at some point we won't have it. In fact, at some point we probably won't have diminishing returns, right? I mean, at some point, because at some point something different will likely happen, right? But the point is that like assuming this time is different has not been a worthwhile thing in all the prior cycles, right? We've always had diminishing returns. And so when you look at this chart, it's kind of like we haven't really deviated from where we were in the last cycle if you measure it from April. So just something to think about, right? I mean, something to think about. Is that it? I don't know. I don't know what to talk about. We've talked about a lot of stuff. We've been going for over an hour. Any other charts you guys want to see? Here's the days since percentage decline. Bitcoin, 482 days since it's at a 30% drop. This is why people say it's never going to have a drop, right? I mean, when you go this long, it feels like it never will, right? Then eventually it does. It's been a long time, right? If you go and look at 20% drops, we did a video actually up here and said, look, guys, we're probably about to have a 20% drop. Actually, I think we were looking at 10% drops. When I was back over here, I was like, look, guys, we're due for a 10% drop. And we got one. But now it's only been 51 days, right? It hasn't been nearly as long. It doesn't imply that it has to go up another 100 days before you get a 10% drop, right? I mean, with the volatility the way it is, I would be very surprised if there's not a 10% drop. And we've been going up. I mean, hell, Bitcoin was legitimately like 39K 2 or 3 weeks ago. Right? So yeah, I mean, there's probably going to be a 10% drop at some point in the not so distant future. If you're going up $10,000 a week, it doesn't take much to get a 10% drop. By the way, guys, we have thousands of charts on this website, right? And I know most of you guys just think I'm a Bitcoin maxi. But you'd be surprised to know that we have an asset filter where you can look at all sorts of altcoins. And if you click on an altcoin, I'm just going to click on ETH, it'll then load up all the ETH charts that we have. And then you can click on the dominance and it'll load ETH dominance, right? So there's thousands of different charts on the website for tons of different cryptocurrencies. So you too can find 1,000 reasons why altcoins will bleed back to Bitcoin. So, I mean, I guess that's where we are right now, right? I mean, this is fear and greed getting elevated, gold breaking out, Bitcoin getting near the highs. Altcoins still haven't broken down against Bitcoin. ETH still hasn't broken down against Bitcoin. They probably will. And the halving's not too far away. So it seems like we're building up into a crescendo that, certainly will likely be some type of local blow off top. And then we'll probably spend half a year after that top is in wondering if it's the actual top or if we get a second pump later on. That's probably what's going to happen, right? We form some type of top. I don't know, maybe around the halving or something. And then maybe before, maybe after, but we form some type of top. We get a larger pullback, maybe like 2013. And then we spend the next year, 6 months debating whether that was it or if we get another rally later on. And the answer to that question is probably not set in stone, right? I mean, it probably depends on incoming data, right? It probably depends on how things go in the economy, as to whether we get another move later on after the current one is over. So yeah, I mean, that's probably what's going on. It's kind of like this over here, right? In 2021, like after we had this initial rally, right? We then spent like 3 months wondering if that was it or if we're going to get something else. But yeah, I would keep an eye on these alt Bitcoin pairs. Let's see if they break down. They're getting close. I believe they will. By the way, another form of confluence is, how we said gold's breaking out, Bitcoin dominance, also blue chip dominance is about to break out, right? And blue chip dominance broke out over here, and that also marked a turning point. But it hasn't broken out yet, right? We need to get a weekly close above 73%. We've wicked above 73% a lot. It's hard for blue chip dominance to go up, which is Bitcoin and ETH, because usually as Bitcoin dominance is going up, ETH dominance is going down, right? So if Bitcoin dominance goes up 0.5%, but then ETH dominance drops, then it's hard for the blue chip dominance to go up. That's why it takes a lot longer. It's because it's, like if one's going up, the other one's usually going down. So basically Bitcoin dominance has to go up more than ETH dominance is going down for this one to go up. But again, it's approaching that level. So, is that it? Oh yeah, almost forgot. USDT dominance. This is the one I almost forgot about. This is the other area of confluence that we're coming into, and you might wonder why. We did a whole video on this about 3 weeks ago. And in that video, when USDT dominance was here at 6.5%, I said in the video, look, guys, we could easily get rejected from here and see USDT dominance go down as everyone YOLOs into Bitcoin as we go into the halving and as liquidity leaves alts and goes back to Bitcoin. We could see dominance of USDT drop like a rock. Now, you might be wondering, what is this trend line that we're looking at, right? What does this trend line represent? First of all, to some degree, trend lines are made to be broken, right? I'm not going to sit here and scream that there's no way that we fall through this trend line. I've drawn 1,000 trend lines over the years, and 80% of the time the trend line gets broken, right? So first of all, let's say the trend line could be broken. But then we say, what if it's not broken, right? What if it holds? What do the prior areas tell us, right? Well, this area was November of 2021. This area right here was March of 2021. This area right here was February of 2020. This tag of the trend line right there was June of 2019. That was the QT bull market high, right? This right here was November of 2018. We'll get to that one in a second. I didn't have the trend line. And then this one right here was December of 2017. What do you notice about all of these tags of the trend line? They all marked local tops. for Bitcoin before cool-off period occurred. Now, again, it could be broken, right? Again, but there's just confluence, right? There's gold breaking out, all Bitcoin pairs breaking down, ETH Bitcoin breaking down, Bitcoin dominance breaking up, blue chip dominance breaking up, right? And then you have USDT dominance going to the trend line that we said it was probably going to drop to as we go into the halving. And the trend line sits at 3.85%. And we're currently at 4.09%. Now, the trend line is subject to change, right? And we could easily adjust this and no one's going to say a thing about it, right? And then you could shift it down to 3.75, or you could adjust it up a little bit and shift it all the way up to almost 4%. The point is that we're getting relatively close, right? We're getting relatively close to the trend line. Prior tags of the trend line marked a turning point, marked a local turning point in the asset class. You might be wondering, well, what is November 2018 doing on there, right? Well, again, November 2018 wasn't really as much of a local high, but it was just before. It was right before we had a 50% drop, right? So, November 2018, we had a 50% drop, right? June 2019, right? It was a 50% drop. February 2020, it was more. It was like 60%, 70%. This one was a 50% drop, right? This one was more than a 50% drop, right? And then here, obviously, going up. So the reason why I point that out is that, all of those areas on that trend line marked a turning point, a local turning point. Sometimes we put in new lows, sometimes we didn't. And again, where we are in the cycle wouldn't suggest that, right? It would suggest sort of just a cool off period to sort of gather ourselves and to sort of regroup, if you will. We're not that far away from it. And some people might reasonably point out that we should also include USDC dominance into the chart, which is reasonable, right? And if you do that, you get something that looks almost the same, right? I mean, you're still basically just walking up that trend line. We don't have as much history because it just doesn't go back as far for the USDC dominance as we do for USDT dominance, and the total one doesn't go back as far. But you can see it, right? I mean, you can see that same trend line that we're not that far away from. So again, a lot of confluence around sweeping the all-time highs. And again, it could turn into more than just sweeping the all-time highs. I want to be open-minded because, I've said before, it's not wise to really underestimate Bitcoin. And what I would recommend, rather than trying to scribble out these 10 different indicators, just come up with something simpler and follow that. I just follow the risk levels, right? I don't pay any attention to all this stuff when it comes to buying and selling crypto, right? All I do is I go over here and say, what is the risk? Is it at a level that I would like to take some profits at? If it is, then I do. If it's not, then I don't. If we go down, if we do get a larger drop this year, then I would just buy in, right? If we go up into the 0.9 to 1 risk band or even higher, I would just take profits, right? It doesn't have to be that complicated. The one thing I've learned is that I don't want to spend my life worrying about when do I buy or sell. And this is something I figured out back in 2019. I just created this risk metric and said, well, at low risk, I'll buy, and at high risk, I'll sell. And we'll talk about the downside risk a lot. And when it doesn't materialize, everyone will say, well, you said it was going to go to this price. Well, so what? I don't know where it's going to go. I'm just going to look at the probabilities and say, this is what I think might happen. But that doesn't mean I'm doing anything different. I mean, are we under the illusion that you can't sell something that you think could go higher? You can't buy something that you think could go lower? So that's why I just say I stick to the risk levels, because there's so many different metrics you can look at, and you can come up with 1,000 different reasons why it has to play out a certain way, and then it could still play out a different way, right? So that is what I would sort of just fall back to, is to say, rather than worry about 20 different indicators, right? Just pick a strategy and stick to it. It's not going to be perfect, but no one's perfect, right? And there's some people that just buy and hold Bitcoin forever, and history shows that that's worked out pretty well, right? But that's where we are, right? And I just wanted to come on here. I wasn't planning on making the video, the live stream, but a lot of people were asking for it, and so here we are. And it looks like we still have not actually taken out the high. Is the risk metric available for free on ITC? It's not, but look, if you don't have to. There's plenty of different things you can use. You don't have to use that one. I mean, you could easily create your own. You could even use things like the Pi cycle top. if you want. I mean, that was pretty accurate last cycle. You could use anything really. I mean, you could even say like extension from the 20-week moving average, right? I mean, there's so many different things you can use. And by the way, there is a free tier on ITC if you want to access to something, but it's not the risk stuff. Are you surprised we came up this high without any correction or consolidation? No, I knew this was going to happen. I'm just kidding. Yeah, of course I am. Like one of my flaws, I think, is that with Bitcoin, is that I just assume that it's going to have to sit back and consolidate for a while, and a lot of times it doesn't. It just keeps on going up, and it usually goes up higher than anyone thinks, and then it usually crashes lower than anyone thinks because it's just it's very much dependent on these risk on conditions. And for people that say it's not risk on, well, I mean, look at the Nasdaq. I mean, it's been going up like crazy, and Bitcoin is basically operating like that, a more volatile version of that. Sorry, I'm just reading the comments. SPX divided by Bitcoin. That's the market cap, but I mean, it's basically the same thing. I mean, the thing with the S&P is that it moves so slowly compared to Bitcoin that I mean, again, if you look at Bitcoin divided by the S&P, I mean, it's basically just, the same thing as Bitcoin USD. It's not a huge difference, right? And I mean, it looks like it sort of broke above that level. It hasn't broken to new highs when you compare it. Maybe it would be worthwhile to look at the Bitcoin gold valuation. So the Bitcoin gold valuation is coming up. It's further away from new highs than the USD valuation. It would have to go up another 10% for it to hit new highs. Do I? Expecting it to only be a 15 to 20% retrace. See, that's the thing. I mean, let's suppose we get to 56% dominance and then Bitcoin gets a correction. And then we're all like, all right, here, finally the correction is here. And then it only ends up being 20%, right? I want people to be aware of that. There does exist a scenario where you get a correction at 56% dominance, which is where it seems like it could very well happen. And it doesn't end up being larger than 20% or so. So that is in the back of my mind. And I think people should be just like the other correction that we had sort of going into the halving. And people are like, well, when's the pre-halving dip going to come? Like, this is the pre-halving dip, right? It already dropped 22%. All the prior corrections were 20%. I know people wanted more. That's probably why I didn't. My guess is that by the time it actually drops more, people are going to want to buy it anyways, right? Because that's the way the market works, right? Everyone YOLOs in the crazy rally, so that by the time you actually get a larger pullback, no one has any money to put any more in. Bitcoin divided by M1. So the problem with the M1 is that the definition of M1 changed. Okay, so if you just go look at M1, you can see that the definition of it changed in 2020. So then when you look at any charts that account for it, they're not that useful because the definition of it changed. With that said, it's interesting that despite the definition change, we bottomed in 2022 at the same level that we bottomed at in 2018. And the top in 2019 was more or less a little bit higher than the tops in 2021. And we're now, if you look at the current price of Bitcoin divided by M1, we're above these three highs. We're above the 2021 highs, both of them, and we're above the 2019 high, but we're not above the 2017 high, right? So the 2017 high is still a bit higher up, right? It's actually another like 45, 46% up from where the current Bitcoin divided by M1 valuation is. Do you fear Bitcoin dominance going past 60, and what could that do? Yeah, look, it's possible. I mean, I'd say my concern is more so that, again, I don't know if Bitcoin dominance is 60%. That's my target, but I would say I'm more thinking about it could go past 60% than not make it to 60%. I mean, it's possible that it comes to only like 58. I know a lot of people have said 58 seems like a more reasonable target, and I could potentially be on board with that, but I think 60% is likely the level. It could go beyond 60. Um, you know, the reason it could go beyond 60 is because it didn't put in a new low, right? So, what if it just kind of comes back up near the highs, right? I mean, I'm not saying it necessarily breaks the highs, but what happens if it comes up near the highs and it could go back up to above 60? But I think at 60%, that's probably going to be close enough. I think. It could certainly go above 60, but I don't know how much more above it. Do the HODL waves show anything right now? That's a good question. A little bit, not a lot. If you go look at the HODL waves, you can see that the short-term holders HODL waves have started to go up a little bit. So there is some renewed, and like retail is slowly trickling back in here, because you can see the short-term HODL waves starting to go back up, and the long-term HODL waves are starting to go down. Right, look at this. Right, they're starting to go down. Right, they were at 79%, and now they're down at like 75. So long-term HODL waves are starting to go down. That's pretty common though when you approach new highs. Long-term, people that accumulated at the lows start to sell at the highs. Even though we usually go past the highs, that's where long-term holders start to take profits. And where short-term short-term holders come in. And, you can't blame them, right? I mean, that's just what happens. That's just how the market works. People that are up 4x take profits. So there's a little bit of it's like, note that in 2019 we didn't hit new all-time highs, and there wasn't really a big drop. A very slight drop, but not that big. I mean, only from like 68 to 65. Right? And if Bitcoin were to drop a lot, then this wouldn't go down that much, because then the people that were hoping to sell at higher prices, then they just have to keep on waiting. Kind of like 2019, right? They just have to keep on waiting. This is a great question. I actually spent a lot of time thinking about this question, and I think that a lot of money is going to be made or lost on this exact question. Is there a chance that alts rally after Bitcoin hits a local high? It's a great question, honestly. In 2017 and 2021, after Bitcoin hit those highs, altcoins rallied. In 2019, they did not rally. But also, Bitcoin did not hit a new all-time high. But also, it was during quantitative tightening and high rates. So the answer is I don't know, right? I'm still in the Bitcoin dominance camp of dominance higher. So I don't really ever expect altcoins to durably outperform Bitcoin. Again, if you're not familiar with what I'm talking about, if you look at Bitcoin USD and you overlay total 3 onto the chart, in 2017, right, in 2017, you can see that total 3 rallied for 3 weeks after Bitcoin topped. In this early 2020 top, right, altcoins rallied for 3 weeks after Bitcoin topped. So yeah, there's evidence to suggest that if Bitcoin puts new highs, altcoins could rally. There's also some evidence to say, look at this, in 2019, during high rates, right, after Bitcoin topped, altcoins immediately plunged, right? So there's a case to be made either way, right? I think that you should figure out how much risk you want to take on and plan accordingly. There's not a right answer to it, because I can't possibly know the way it's going to play out. I can provide evidence to support both views. Prior times we made new highs, we saw altcoins rally after Bitcoin topped for 3 weeks. In 2019, we didn't hit new highs, and altcoins did not rally after Bitcoin. But also, it was during QT and high rates. Evidence to support both views. All right, guys, I think we're going to wrap it up. Subscribe if you're not subscribed. Give the video a thumbs up. Again, we do have the sale on ITC Premium. Links in the description below if you want to check that out. Tons of charts, thousands of charts. Again, not only on crypto but also on stocks and macro. I'm not perfect. I'm going to get a lot of things wrong. I have been wrong about a lot of things. I've been right about some things, wrong about other things, and it's just going to continue to be like that. I'll try to do the best I can, but it's often going to fall short of what a lot of your expectations are of me. So I just want to be clear that if you think if you're new, if you're not new, then you know I'm not going to be right because you've seen it happen many times. If you are new, then please do not assume I will be right because I will be wrong very, very often and in a very glorious way, right? I mean, like I will be very wrong at many different stages. And so I don't want you to take my views and say that this is what has to happen because a good chance is that my views are not what pans out. I just want to, for everyone new to understand that and to know that. And for everyone who's already here, you're already well aware, right? You're already well aware. Anyways, we will wrap it up there. Please subscribe if you're not subscribed. Give the video a thumbs up. And there's always Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.